The chip sector shuddered at a couple of overnight pressures. Firstly, Donald Trump rattled the global semi-space with some comments that Taiwan should pay for its own defense against the threat of mainland China. You'll remember that Taiwan produces around two-thirds of the world's semiconductors, and uncertainty about a potential shift in U.S. policy from a possible new Trump administration regarding Taiwan is a major red flag for the sector. Let me just step aside and give you a closer look at what it really means for all of the chip majors and the unwinding pressure. This is what we've been talking about because the rally has been so parabolic for the likes of an NVIDIA or even for Micron or AMD that any bit of news, the sensitivity is very high to any bit of negative news or any bit of news that can derail sentiment in a major way. And that's what exactly we're seeing play out for these stocks. Reports also emerged yesterday that the current Biden administration is also considering upping the curbs on companies that sell chip equipment to China, restrictions aimed at limiting Beijing's access to bleeding-edge technology, but also limiting some U.S. chip makers' profit potential. Now, what are we talking about here specifically? Dutch chip equipment maker ASML, that holds a major, almost a monopoly in this market when it comes to chip equipment, slumped on the back of these reports, as did the US listed shares of TSMC. Its Taiwan listed shares just opening trade and looking like this. This is how the ADR did, down 8%, understandably, and TSMC right now getting out of the gate in the market session is also down 4%. The other chip names in Taiwan opening like this. Let's just bring up the market for you. You're looking at UMC under pressure, Power Chip Semis, we were talking about this yesterday, also down 3.5%, and MediaTek down 4.5%. So basically, there's no place to hide, at least today when it comes to the chip story in this part of the world. Our reporters around the region are standing by with the global reaction to the chip wreck. Sam, Lynn, and Sherry are watching their markets. Let's start off with this potential pressure on China's chip supply chain, which is so entrenched with what's happening in Taiwan as also South Korea. Sam Varas joins us with a look ahead of the market open there and preparing us for the session ahead. Sam, good morning.
Very good morning to you, Tanvi. I think what this is telling us is that no matter who wins this election, this is going to continue to be a chip story with, of course, Trump's comments and now the Biden team, these reports suggesting that they're going to try to get even tougher on China. So really, it is China that this is all about when you talk about US and the administration wanting to work with allies, particularly in this part of the world, to continue to keep the pressure and the squeeze on China. So we will, of course, be talking about that throughout the course of the program, what that's going to mean for some of these companies which have found workarounds, arguably, in this space to sort of circumvent what have originally been the initial export controls that have been put in place. We know that China, as a result of that, has wanted sort of older products, and that's been big business for some of these companies who've then been tapping into try to fill that void with selling less advanced goods to China as a way to sort of circumvent, as I mentioned, some of these export controls. So we'll be talking about that, but we'll be watching the reaction certainly in the Chinese markets today. We've got to remember that when we sometimes hear some of this noise coming from the US, we do sometimes see a bit of a rally in Chinese chip stocks, and that is because the thinking here is that the more that the US piles the pressure on China, the more we see backing for the domestic industry. So let's take a look at how the markets are positioned ahead of this. We've got the Chinese currency actually firming up just ever so slightly offshore right now, 726.90 against the greenback. We've got the FTSE China A50 futures pointing to a down start, only ever so slightly now. So perhaps some nervousness in this market again today. But of course, markets and investors are nervous for a number of reasons over in China right now, as we've been talking to a number of investors about how they're frustrated with how things are going, with the mixed data, the disappointing Q2 GDP print, some of the concerns around the policy prescription here. And so what investors are very much keeping their eyes peeled for now is, of course, what we're going to get from the third plenum as it wraps up today. We'll hopefully be getting some some sort of document that will be published by the policymakers as to what they've hammered out in the last few days over in Beijing, more so on the medium to long-term policy direction with regards to new productive forces, tech and innovation. And so that is why the chip stocks are also important to look at today if we get any news as to how they plan to sort of steer the ship when it comes to some of the sectors like chips in the face of this US pressure and as they continue to build on this self-reliance campaign. So our eyes are peeled for anything to do with that. But then, of course, looking ahead, markets definitely seem to be in a bit of a holding pattern right now as we await more policy steps, particularly in the short term with meetings like the Politburo that is expected to be gathering in Beijing towards the end of the month, which will give us an idea of more sort of counter-cyclical measures, given that we know that the authorities have been meeting with a number of these companies and entrepreneurs and businesses in recent weeks, which has really been seen as preparation for that. Of course, continuing to keep our eyes on the PBOC, as we know FX stability continues to be key here as well, what they're doing in the bond market too. So we will be watching a number of moving parts in this market today. But Japan chip names also copping a battering, Lynn. And, you know, this is an interesting part of the story as well, given that we have had Tokyo Electron, who has been, as I said, one of those companies that has managed to find a workaround. But this just puts extra pressure on this company now.
Yeah, absolutely. And we're really seeing that in the price action. Since that report came out midday yesterday, we saw Tokyo Electron shares down 7.5%. This morning, after about an hour of trade, down close to 10%. But it's not just Tokyo Electron. As you can see there, all of the chip equipment makers are all down considerably. There's so many things to unpick here, really, because this report, of course, that came out from Bloomberg specifically named Tokyo Electron. When you look at its market share in relation to its photoresist coating, it's about 90%. 44% of its sales go into China, even though Japan has put through those export controls in line with the US as well as with the Dutch last year. A lot of the sales going into China are for the lower grade equipment, so not caught out by these export controls. But in terms of that report, you know, it says basically that they could pull out this tool out of their toolbox called this foreign direct product rule, which means that anything in the supply chain that has a little ounce or tiny bit of US technology could get subject to these controls. So that is why we are seeing the sell-off. Now, in terms of some of these other stocks, I think it's also important to highlight Disco Corp, not as big in terms of market cap, but as you can see there, also down 8%. That's because, you know, it also has basically a big market share when it comes to its cutting and grinding equipment as well. So that's also one to watch. We will get the Q2 earnings there later today. South Korean heavyweights are also exposed to chip developments. Sherry Kang, what is the damage?
Yeah, and we're looking at, of course, this pretty sizable looking losses coming through for major chip makers in South Korea. Samsung Electronics are down 1%, SK Hynix are down 3.4% at the moment. So in the case of SK Hynix, it's actually down 10% month to date and close to 9% this week alone. And of course, we are talking about a stock that has a higher price beta when it comes to its comparison to Samsung Electronics as well. Now, SK Hynix is set to report their results for the second quarter next Thursday. And of course, later on today, we've got, in fact, a TSMC, the largest contract chip maker in Taiwan, set to report their results as well, and solid expectations. But I don't think this is really about the fundamentals that the market is really going with. So yes, we'll see how this, U.S. trade curbs related jitters, how long that goes. In the meantime, we've got, of course, Samsung Electronics is showing relatively smaller downside here in all this. And of course, that has to do with the fact that, number one, that it didn't really see this kind of parabolic rise that we saw in NVIDIA shares and, of course, SK Hynix so far this year as well. And then at the same time, there is really the layer of HBM-related optimism playing out there. And then at the same time, this kind of Trump-related trade jitters is actually fanning this narrative about how Intel could be the beneficiary in all this, because it is one of the biggest beneficiaries of the U.S. CHIPS Act. It's got more exposure when it comes to capacity in the United States. And that actually goes the same for Samsung Electronics and SK Hynix as well, although they are not American companies. So definitely a layer to look into as well.